Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of public filings and try to make sense of it all. Today, we are diving deep into Aeluma Incorporated's latest reports, and let me tell you, it is a fascinating look at a company in the fast-paced world of semiconductors. This is a company that develops really advanced optoelectronic devices, like the kind of tech that makes cameras and sensors in your phones and cars super smart. They are trying to do something pretty revolutionary, trying to manufacture these high-performance chips, using materials that are usually super expensive, but on big silicon wafers which are way cheaper and used for making regular chips for everyday electronics. Think of it as putting luxury car engine parts into a regular car to make it perform amazing without breaking the bank. Their main goal is pretty ambitious. They want to shake up the image sensor market with their super sensors that they believe are better and have more capabilities than what is out there. They are focused on using special nanomaterials and making these chips on those big silicon wafers to get huge volumes and keep costs down, making it perfect for products that everyone uses. They are aiming for markets like 3D imaging, LiDAR for self-driving cars, augmented reality headsets, and even advanced cameras in your phones. And they are not just talking the talk, they are walking it too. Aeluma has been snagging some pretty significant government contracts. For example, they have a contract with NASA to work on something called quantum dot photonic integrated circuits for space applications, really cutting edge stuff. They also have a big contract with DARPA, that is the Defense Advanced Research Projects Agency, to develop new ways to integrate tiny semiconductors for AI and 5G networks. These government wins show that their technology is highly valued by some very important organizations. Now let's talk about the money. This is where things get really interesting. Looking at the financial tables, we can see a massive jump in revenue. For the year ended the 30th of June 2025, revenue shot up to about $4.7 million. That is a huge increase of almost 408% compared to the previous year when it was just under $1 million. This growth is mostly driven by government contracts, which brought in about $4.4 million in 2025. This shows that their government partnerships are not just for show, they are bringing in real money and validating their technology. But with great growth comes great expenses. Their operating expenses also went up significantly by 24.2% to $6.8 million. This increase is mainly because they are buying more materials to make their products as revenue grows, and they are also spending more on their people, including salaries and benefits. It is a common story for growing tech companies. They have to spend money to make money and scale up. Even with this massive revenue growth, the company is still losing money. For the year ended the 30th of June 2025, their net loss was about $3 million. That is actually an improvement from the $4.5 million loss the year before, so they are moving in the right direction, but still a long way from profitability. This is where the picture gets a bit brighter. As of the 30th of June 2025, Aeluma had $15.7 million in cash and cash equivalents. A big chunk of that came from their public offering, which brought in $13.8 million. This infusion of cash is crucial for early stage companies like Aeluma, as it helps them keep the lights on and fund their research and development. They believe this money will be enough to keep them going for at least the next 12 months. Now, no company is without its risks, and Aeluma has plenty of important ones listed. One of the biggest challenges is their reliance on a very few customers. They mentioned that 71% of their revenue in 2025 came from just one customer. Losing that customer could be a huge blow. They also have a limited operating history, which makes it harder for investors to predict their future performance. And of course, they are in a super competitive industry where technology changes fast. This means they have to constantly innovate to stay ahead. Mountains we depend on third-party manufacturers see mountains. They also depend on outside companies to make parts of their products. If these manufacturers have problems or raise prices, Aeluma could face delays or higher costs. Plus, there is always the risk that their technology might infringe on someone else. Patents, leading to costly legal battles. Looking at who is running the show, Jonathan Klamkin, the CEO, is also a professor at the University of California, Santa Barbara. He has a strong background in photonics and optoelectronics, which is exactly what this company is all about. It's good to see leadership that truly understands the technology. Christopher Stewart now heads their finance department. He has experience leading companies through big changes, including taking one public. Having a solid finance team is vital for a company in this growth phase. The company's stock trades on the Nasdaq capital market under the symbol Aeluma. They are classified as a smaller reporting company and an emerging growth company, which means they have some flexibility in their reporting requirements, but also face scrutiny. They are also a smaller reporting company, which means they have certain disclosure requirements that are simpler than larger companies. This can sometimes make it harder for investors to get a full picture. This filing is about allowing existing shareholders to sell their shares. In total, over 2.1 million shares are available for sale by these selling stockholders. This is important because it tells us how many shares might hit the market soon, which can affect the stock price. So, what is our take on Aeluma? On one hand, they're doing really innovative work in a high demand sector, securing major government contracts and showing impressive revenue growth. This suggests their technology is promising and has real-world applications. Their leadership team seems knowledgeable about the core business. However, they are still very much an early-stage company. They are not yet profitable and rely heavily on a few key customers and government contracts. The increased expenses are expected, but managing them efficiently will be critical. The significant number of selling shareholders means there could be some selling pressure on the stock price in the short term. The risks related to manufacturing dependencies and intellectual property are also substantial hurdles they need to navigate successfully. Aeluma is a company with high potential but also significant risks. It is a classic high-growth tech story. Investors need to be comfortable with the volatility and the long road to profitability. They are playing in a cutting-edge field where success can be huge, but failures can be just as dramatic. Alright, that is our deep dive into Aeluma. What do you think about their strategy and their financials? Let us know in the comments below. If you found this analysis helpful, give us a thumbs up. It really helps us out, and make sure to subscribe so you do not miss our future breakdowns. Also, join our Discord community for more in-depth discussions, linked in the description. Thanks for watching, and we will see you in the next one.